Here's what Wall Street doesn't want you to know. While everyone's celebrating Trump's latest trade move, the oil markets are sending mixed signals that could spell trouble ahead. Oil prices managed to climb modestly higher during Tuesday's trading session. But here's where it gets controversial. Investors are caught in a dangerous balancing act. On one side, they're breathing a sigh of relief over President Donald Trump's decision to postpone those aggressive U.S. tariffs on Chinese goods. On the other side, they're nervously eyeing his upcoming face-to-face meeting with Russia's Vladimir Putin, wondering what geopolitical bombshells might drop. Let's break down the numbers that matter. Brent crude oil managed to edge up to just under $67 per barrel, while West Texas Intermediate WTI, America's benchmark oil, hovered around the $64 mark. But here's the part most people miss. These prices are still languishing near their lowest levels in 2 months, despite Tuesday's modest gains. The trade in action tells a story of uncertainty. Monday's session was notably subdued, with traders seemingly sitting on their hands. Early Asian trading hours showed characteristically thin volumes, suggesting that major players are adopting a wait-and-see approach rather than making bold moves. So what triggered this cautious optimism? Trump signed an executive order that extends the trade truce with China through November 10th, effectively kicking the can down the road on a tariff increase that was scheduled to hit on Tuesday. This move sent ripples through broader financial markets, sparking what some analysts are calling a relief rally. But here's where the controversy begins. Is this tariff deferral actually good news for oil? Or are we just delaying the inevitable economic pain? Some market veterans argue that this temporary reprieve only creates more uncertainty, as it leaves businesses and investors guessing about long-term trade relationships between the world's two largest economies. And this raises a critical question that every investor should be asking. With oil prices still struggling near 2-month lows, despite this supposedly positive trade development, what does this tell us about the underlying health of global energy demand? The reality is that oil markets are walking a tightrope between geopolitical tensions and economic fundamentals. While the China tariff delay might seem like a win, the looming Putin meeting could completely reshape the energy landscape depending on what deals or conflicts emerge from those discussions. What's your take on this? Do you think Trump's tariff deferral is a genuine step toward trade stability, or just political theater designed to buy time? And more importantly, are these persistently low oil prices a warning sign that global economic growth is weaker than politicians want to admit? Share your thoughts in the comments, because this debate is far from over, and your perspective might be the missing piece of this complex puzzle.